What's going on, guys? Welcome back to another video here. In this one, we're going to be looking into the third and last playbook confirmation setup video of the series, which is the low volume node. So the low volume node essentially forms in the markets when price moves through a region very quickly and transacts low volume and spends very little time as it's attempting to move or auction through that location. And so we can then use that low volume node as an area of interest for entries or pullbacks into it from a supply or demand zone. The whole concept is that, let's say there's a pre-existing supply zone. Price rallies into that pre-existing supply, and then it moves to the downside very quickly, transacting low volume in that process. That low volume node can then be used as an area of interest for us to wait for price to pull back into it, where we then look at the order flow for further confirmation to confirm that sellers are present from that supply zone and from that low volume node. If they are, we can then short the market for a move back to the downside, as we now have sufficient evidence from the tape to confirm that sellers are present from that supply zone, and vice versa from demand. And so the low volume node, for me personally, is visualized to the depth of market. The depth of market has a volume profile within it, a session volume profile, SVP for short, and it's essentially just showing us the total volume transaction at each price level throughout the session. So very easy way for us to visualize that low volume node. You can, if you'd like, use a volume profile separate from the depth of market. I know many platforms offer the volume profile. It'll show you the same thing. It's just not visualized in the same exact way. So despite visualizing the low volume node through the DOM, I confirm entries into the low volume node using a heat map or the delta footprint chart, or both. And so for the low volume node that we're going to be looking into within Sierra charts, the context for this is that price was consolidating here, and then it moved to the upside, forming a demand imbalance. And in the process of doing that, it also formed low volume structure from the 35s to the 30s. And so we're going to see price pull back into it, where right about here we see some very compelling evidence that buyers are stepping in to defend this new demand and this low volume structure for a move back to the upside. All right, guys, so we're now over in Sierra charts. I'm going to give this data a replay. This is in 30 times speed. All we're really looking out for here is to see this low volume node structure form from the 35s down to the 30s. So the market opened up at 9:30, very quickly moved to the upside, transacting low volume in that process, and also forming that new demand structure that we talked about just a few moments ago. And so I'm going to pause this data at about 9:45, coming up here in a few moments, and we're just going to talk about this structure here. Okay, so if you just look at the depth of market, the way that we are classifying this low volume is the way that it's shaped relative to the volume throughout the session. So obviously, this volume has a relatively smaller amount that is transacted through this location from the 30s to the 35s relative to this volume up here from the 40s up to the 35s. So in other words, this would be called a valley, and up here would be called a peak, essentially low volume and high volume, right? And so what we're going to see, and the data that I'm going to replay, is price pulling back into this low volume node structure, which again is a symbol of strength within the market. And as price is pulling back not only into this low volume node, but the new demand structure that is formed, we're going to look at the heat map and the delta footprint chart, which shows us very compelling information, which supports that buyers are stepping back in from this low volume node structure and this demand structure to then support and validate an entry for us to take the market long from this structure. All right, guys, so I've replayed the data further. We left off about right here. Price topped out for the time being, came back into this low volume node structure from the 35s down to the 30s, and it has spent some time dancing around in here, but we're going to go over the order flow activity that happens from this point on forward. So keep an eye on the 32s, and remember, the whole point of this is to validate that buyers are present within this low volume node structure for us to actually have the evidence to support or to validate an entry from this low volume node structure, which was from the demand zone. Okay, so I'm going to give this data a replay. We're in 5 times speed. keep an eye on the 32s here. So essentially what we're going to see is a very large amount of aggressive market sell volume transacting within this region at the 32s, but price is going to be unable to break below it. So we can see a lot of sell volume transacting here at the 32s, about 500 to 600 lots, and we're just going to see a repetitive move back into this level, which only increases in sell volume, but to which sellers have no avail. There is no downside continuation. And so what does that tell us about what's going on in the auction right here? It tells us that there's a passive buyer sitting here and absorbing these aggressive market sell orders, right? And so what we can see is that this is starting to look like a B profile. And if you guys need more information on the B profile, go back to the trap participant setup, because that's what this is lining up to be right now. We can see a passive buyer sitting here and absorbing these aggressive market sell orders. And on an upside move, we would understand that those sellers, all of this selling volume right here, all of the participants or who are short the market aggressively right here are trapped on an upside move. And so this can act as a very powerful confirmation for us to long the market from this demand zone, from this low volume node structure. So look at the market just continuously coming into the 32s, right? It can't break below, and we're about to form a B profile here. So at the formation of this B profile, which is when the next candle forms, excuse me, the next bar forms, I would validate that as a entry confirmation. Speeding this up to 8 times speed here. Okay, there's the new bar. At this point, we can enter the market long from this low volume node structure. And what we're going to see is we're going to see price rotate back down and break low of day very briefly. It's going to then move back up above the 32s and then support the 32s again. So if you're long here, maybe you get stopped out under low of day. Okay, I'm not going to sit here and just show you guys information that is going to be pitch perfect all the time, right? On this entry confirmation, maybe you would get stopped out, but you can always re-enter on and move back to the upside, right? So price is going to break under the low of day here, and then essentially we're going to move back above the 32s. Here, look at this size right here, the 32s. It's now increasing in size. There is a bid that is very actively stepping in to defend this price level, and this is very clear for us to see through these order flow tools. Through the candlesticks, we cannot see this information. It's impossible for us to understand what's going on behind the scenes, and the makeup that actually makes up these candlesticks is invisible to us if we're not using these tools. Speed this up a bit here. Okay, even more size at the 32s. We're going to break under low of day. And then watch this. Pull back into the 32s right there. And then we're just going to blast off here. 32s is very resilient to the market inside this low volume node structure from our demand zone. And at this point, if you've got stopped out on this trade, price defending that 32s would act as a, again, very valid confirmation to long the market. So what we're going to see here is price is just going to essentially rip up from this demand zone, and the market is going to rally really until the end of the day. And so using order flow really allows us to see this information. We can't see the low volume node structure without the depth of market or without a volume profile. We can't see that there's a passive buyer absorbing these aggressive market sellers at the 32s. And we can't validate that buyers are truly present from this demand zone if we don't have information, if we don't have order flow tools that actually allow us to see that information, right? So order flow is just a must-have, guys. It's so powerful, and this setup would have worked excellent for a move back up into high of day or higher. And order flow tools, they really allow us to capture these excellent risk to reward trades, because if you're trading a candlestick, right? Let's say that you're waiting for the close of the candlestick on when price breaks this low of day and then moves to the upside. right? We can enter the market long at the 34s, 35s, right here, as prices has bounced off the 32s and then continued to move to the upside. If you're trading candlesticks and you're waiting for a close of this, maybe you're long at the 37s, right? And so it's just going to skew your risk to reward as you trade these candlesticks. Trading order flow allows us to enter the market at the most optimal times. At the times when everybody else is shorting the market into this low volume node structure, we see the buying. And so this can allow us to capture these excellent opportunities. So that's just one example of the low volume node. And now we're going to head over to the next video to talk about zero prints.